look, we've got $85 trillion in debt. This Ponzi scheme is on the largest scale in world history. And literally it's a Ponzi scheme. You've got the confidence game, and it works until it doesn't. And when do you see a radical shift in price in the metals? It could be tomorrow. It could be 3 weeks from now. It could be 3 years from now.
And welcome into crushthestreet.com. We've been covering some of the best topics here at crushthestreet.com. Obviously, I'm biased, and that's in my opinion. But really, some of the greatest minds across some of the hottest trends. I mean, we're talking about digital currencies, Bitcoin, going crazy here, some hot commodities, and really trying to be in front of the trends. And I want to do that here with our next guest. A lot of people are forgetting about gold and silver as we see things play out, with digital currencies. We've seen the stock market do very well. And gold and silver have been somewhat on the sidelines. And I feel like if you're ignoring that, you might not be on the train when this train leaves the station. So I have on the line with me David McAlvany, a highly respected thought leader in the precious metal space. And with the bullion company, McAlvany, his website, McAlvanyICA.com. David, thanks for coming on the line with me today.
Kenneth, great to be with you.
I was reading a Zero Hedge headline this morning, and it said, uneven inflation. The protected are fine. The unprotected are impoverished debt serfs. So I wanted to get your thoughts on, you may or may not have read the article, but what does that mean to you in the research that you've done?
Yeah, well, I think there's two broad categories of folks in the economy, those that have assets and those that don't. And the Fed's monetary policies, the European Central Bank's monetary policies, those of the Bank of Japan and others have very much helped those that have assets. We've seen not only the creation of liquidity and really accommodating the financial markets with cheap credit, but that has not been sort of equally distributed across the economy. Socioeconomically, again, you've got this divide. Those who have assets have seen asset price inflation. Those who don't have assets, living at their means, maybe even living beyond their means just slightly just to pay bills. And you see them gradually becoming debt serfs. So in the event of inflation, you have a huge segment of our society that is very unprotected and very vulnerable. It's not as if their incomes are going to ratchet higher as the cost of goods and services ratchet higher. And so, again, those who have assets, I think, are okay. They'll be protected. Depends on what assets that you have. There is a negative impact ultimately in the fixed income space and even in the stock market with high levels of inflation. It keeps up at the front edge, at least stocks do. But ultimately, inflation can hurt the stock investor too. So I think it's the folks that have no assets that are or living on a fixed income. I mean, if you're a retiree and you're looking at sort of what you have coming in, there is a general sense of frustration. That you might run out of money before you run out of month.
David, one thing that I appreciate is some states are actually making some steps towards, I think, something good for the people rather than the state or rather than just the country. And that's as opposed to these central banks and these, bullion banks manipulating precious metals down. We just got news that, gold and silver bullion now being treated as money in Arizona. Arizona Governor Doug Ducey signed into law a bill that eliminates capital gains taxes on gold and silver, thus allowing Arizona residents to use precious metals as currency instead of Federal Reserve notes. States like Utah, Oklahoma, we've seen similar things like this. So what are the implications of this, in your opinion?
Well, I mean, for the average American, it'd be phenomenal if this became, generally accepted, not only at the state level, but at the federal level as well. Would love to see gold and silver treated as currency. That's frankly, constitutionally, what money is supposed to be. It's only in the era of the Federal Reserve. Your listeners are probably well aware of this, but we've had three different central banks. The first central bank, we let the time run out on it. We didn't want to renew its charter. The second, Andrew Jackson actually kind of killed. He did. I mean, and he looked and he said, look, we're able to print money from nothing, and it feeds corruption in politics, and it feeds massive manipulation in the marketplace. We need to get rid of it. He did. We gave birth to the third central bank, what we know as the Federal Reserve, back in 1913. And, since that time, we've been printing dollars. And, originally a $20 bill and a $20 gold piece had the same value. And it didn't matter. It was just kind of, for convenience sake, what did you want to use? One was kind of a call on the other. You had this piece of paper, but it gave you the right to pick up an ounce of gold at your bank. And then, of course, that came disconnected. I don't want to bore you with all the history, but a return to gold and silver as real money is very significant. Let me tell you about a business deal that I knew about. One of our clients, her husband sold a business, and, for the next 50 years, the payment structure of this deal was, we're going to pay you $1,200 a month for the next 50 years. Mm-hmm. And the deal is, back in the 1970s, $1,200 a month was a decent sum, right? Now, if she had said, well, I'll take, the equivalent in gold ounces, really what would have happened is, instead of her $1,200 a month, which today is about what she might receive in Social Security payments, maybe it covers rent, maybe it covers food and a few basics. But the reality is, had she taken gold instead of dollars and locked that in instead of Federal Reserve notes in a few gold ounces, she'd be making $8,000 to $10,000 a month at present instead of the $1,200 a month. Mm. What's changed, Kenneth? What's changed is the value of our paper money through time. What's remained relatively constant is the purchasing power of gold and silver. You look at a silver quarter today. Let's call it worth $3. All right, well, that'll buy you a gallon of gas today. And lo and behold, a silver quarter back in the 1970s also bought you a gallon of gas. Mm-hmm. So the silver quarter is what it is. I mean, it's just... Quite frankly, precious metals are absolutely boring. It's like cash. We save. What we want as individuals is to save in a denomination that is stable. Right. Save in a denomination that is not gamed, toyed with, manipulated, controlled, not to our advantage. But I think there's a lot going on there in the state of Arizona. And if this is kind of getting our foot in the door, beginning a broad national conversation on the merits of gold and silver as money. I did a DVD a while back called "What is Real Money?" and I gave all the history of it. I encourage people to, you can look at it online, or if you want us to send you an actual disc, we'd be happy to. But look it up on YouTube. What is real money? We would argue that gold and silver have always been real money. Go back 5,000 years. And we've experimented with lots of other things. Every experiment has failed. And it's been genius that's failed. And we're not talking about dummies that are creating sort of ridiculous concepts. No, every monetary experiment in the past has been led by a group of PhDs, arguably far smarter than, well, at least I'll speak for myself, far smarter than me. I can't speak for you, Kenneth. A budding genius.
I'm a genius.
Well,
I'm just kidding.
It's just that something simple like gold and silver can't be screwed around with. And there's some merit to that.
David, I totally agree with you, and I appreciate what we're seeing here in Arizona. And I guess I just wonder what the purpose behind it is. We've seen, in my opinion, people who have been very honest and for the people, such as Ron Paul, in our government. And I'm just wondering what this legislation does for the government. Is it problematic for the U.S. government or state governments which are dependent on a stable, strong fiat, which, in my opinion, is in very big trouble?
Well, see, I think at the state level, this makes all the sense in the world, because at the state level, they don't have the ability to print money anyways, right? So the real advantage to unlimited money printing and credit creation is that it accommodates budgets that are set back in Washington that keep on reaching for the skies. So when you look at why we don't live within our means as a nation, it's because we have a monetary system that supports living beyond our means. If we had a monetary system which was sound in nature and not fiat in nature, there would be a natural limiting effect to what we could do from a budgetary standpoint. What politician wants to be reined in on from that standpoint? I mean, so the reality is the guys at the state level who don't have access to the printing press and do have to pretty well live within their means, as we've seen with Puerto Rico, you can't spend and spend and spend without there ultimately being a comeuppance, right? But at the federal level, there is no comeuppance because you're playing with broad levels of confidence. It's a confidence game. As long as people agree that Federal Reserve notes have value, then the confidence game continues, and they can continue to create budgets which are way too big for the amount of revenue they're generating. So I think what they're doing in Arizona is very admirable. You're not going to see that kind of thing championed at the federal level because there's not a politician. I don't care if they're Republicans or conservatives. Republicans, conservatives of any ilk, or liberals, Democrats, what have you, that really want to control the budget. Their job is to bring as much bacon back to their constituencies as possible from the federal tax take. They win the popularity contest, and that means they are legacy politicians. I guess the only other thing that sound money, that brings a discipline. Sound money does. Term limits might also bring some discipline back to D.C.
David, people are tired of seeing what's the manipulation, or they're getting worn out at least. I mean, year after year of just seeing precious metals. I mean, they do well, and like you said, holding your money in it for many years at a time. But I mean, with the amount of money creation that we've seen, even since 2008, the reflection in precious metals has been lackluster when you look at what we've seen in the monetary system and compare it to precious metals. Now, I would argue that makes precious metals that much more undervalued with so much potential. But I want to address the fact that people are just getting worn out. And I feel like people will miss this train and it'll leave the station, and many will be on the sidelines, or many will sell and get out and go into other areas which seemingly are performing, and then be left behind when we do see gold and silver move. But, let's start here. Keith Neumeyer has been someone who has been vocal about the manipulation and frustrated with it. I mean, he has mining companies which are not selling their product for as much as he feels like they should be selling for. And my question is, why aren't there more companies out there saying, hey, this is a problem. They're manipulating our product, our inventory down, and we're not making as much as we should. Why isn't this more mainstream?
Well, Kenneth, as you know, we've been in the gold business and the silver business as brokers, both on a wholesale basis to Wall Street and on a retail basis to individual investors since 1972. So we've kind of seen the ebbs and flows of sentiment. And I completely agree with you. Gold and silver are very undervalued today relative to the stock of money that's out there. If you're looking at money supply statistics, gold should be considerably higher, and silver too. It's investor demand that is the swing vote in the market. And investor demand is what makes the market move right there at the margins. So a little bit more buying, and yes, the price is increasing. A little less buying or even some selling, and the price is gonna be moving lower. And so, what have we had since 2008, 2009? The recovery story in the economy, and ultimately the movement higher in the stock markets, the S&P, the Dow, the NASDAQ, and what have you. Certainly, the investor community is saying to themselves, we kind of like this. Look at the bull market in stocks. Let's get on board. And to the degree that investors are enamored with the idea of growth in the economy, the recovery story, et cetera, they really aren't paying a lot of attention to gold. And again, that is the swing vote in the gold market. I think you will see a tremendous move into metals by investors beyond just what we see in China and India today, where there is continual investor demand. But in the U.S., look, in the first quarter, investor demand, at least from the Mint, was down 50%. Well, look at the Dow, 21,000. Any surprise there? It's not a surprise to me because people can only kind of think about one thing at one time. Either the world is fixed and everything's good and Trump is going to make us, the America that we all want to be and have, or it's all going to hell in a handbasket and we better run for the hills. And literally this bifurcated mind of either being completely driven by fear or completely driven by greed. It's as if people can't hold two ideas in their same minds and say, stocks are moving higher. Maybe they'll move even higher still. Might be smart to hedge my bets. There's not a lot of that going on. So yeah, I think it's very undervalued. To your question about the companies that are for ending manipulation of the gold market, what Keith Neumeyer is doing, et cetera, really you have two kinds of companies in the gold and silver space. Those who look at their primary product buyers, and again, when we say that investors are the swing vote in the metals market, I absolutely mean it. The core purchaser of metals, particularly in the silver space, is the industrial user, right? So you want to keep your industrial user as happy as possible. So if you're a member of the Silver Users Association, you'd actually like stable pricing, and low prices are better than high prices because you're looking at input costs in the products that you're manufacturing. So you've got an entire segment within the silver space which is playing favorites to their core buyer, their most predictable buyer. Year in and year out, investors may fall in love with silver, investors may fall out of love with silver. But for the silver company who's looking at consistent and predictable demand, they're looking at the industrial user, right? So they could give a rip. They could give a rip about the manipulation. In fact, manipulation is their friend because it brings the price down and it keeps their input costs reasonable, right? So it's the second type of silver company that says, hey, our share price actually benefits from an increase in price. And yeah, we'd like some stability, but we stand to benefit from an increase in the price of silver. Enough of the shenanigans, enough of the manipulation. Enter Keith Neumeyer and a few other CEOs of his ilk, who are more than open to being unhedged and keeping the asset that they're managing fully exposed to a move higher in the price of silver. But I'm just telling you, there's a huge part of the silver and gold community that don't want higher prices. Don't want it. You and I as investors would say,
bring it on.
I don't want to own those companies.
Right.
And I think we can separate the wheat from the chaff accordingly.
David, great thoughts there. And I was just kind of thinking in my mind while you were saying those things, people are so conditioned, at least right now, with the way they've seen it trade, gold and silver, that is, being range bound. And I feel like Bitcoin, we've covered that significantly here at Crush the Street, has given investors a taste of what something looks like when it really starts to take off. I know you mentioned there's some benefits to stability, but for people who own the metal, investors, people want to see it go higher. And you know what? When it comes to that mentality, I feel like, if silver moves to 21 or 25, people would just expect it to move back down to 17, sell at 25 and then buy it back at 20, because we've been so conditioned to just see it tightly bound. But Bitcoin has given people a taste of what something looks like to go higher, higher, and higher as people just pile in. And obviously there's a lot of hype in the region. I'm looking at it now. It hit as high as 2,700, and then the last I checked, it was 2,350. So we might literally be recording this in the middle of what could be a big correction. But it was very telling to watch that happen with the digital currencies. And I think a lot of gold investors are wondering, hey, when is this going to happen in gold, or can it happen in gold, where it just has that just massive run where, it's going up hundreds of dollars every day for a period of time. And we see that big run up, that reflection of the stock of money being reflected in gold and silver. So any final thoughts on that?
Kenneth, again, we've been doing this since 1972 as brokers in the metal space. And, it's not going to be a surprise to us. We've seen it. We've seen silver move from less than $2 up to $50. We've seen gold move from $35. I mean, our original clients were buying gold at $35 to $37 an ounce. That means we've been doing this for a long time.
Sure. On
its way to $8.75. Those are reasonable moves. From current levels, to see a 10x move in silver, to see a 5x move in gold, I think this is a given. But you have to have some traffic. That is, investors who say to themselves, we want to own it. And right now, there's just not a lot of investor traction here in the United States. I think that'll change. I think that'll change in a hurry. And to realize how small the space is, there's not a lot of physical metals available. There's not. So I think the big surprise will be people going back and saying, Kenneth, I remember when you were talking about silver at $16 and now it's 160. I just wish I'd gotten in earlier.
That's exactly why we're doing this call right now. That's exactly why we're talking right now.
And I think with people who understand the fundamentals, look, we've got $85 trillion in debt. This Ponzi scheme is on the largest scale in world history. And literally it's a Ponzi scheme. You've got the confidence game, and it works until it doesn't. And when do you see a radical shift in price in the metals? It could be tomorrow. It could be 3 weeks from now. It could be 3 years from now. But it happens in a day. It happens in a day because it's sentiment that drives the market crazy. And right now, sentiment is negative, but you can see it turn positive for gold in a heartbeat. Why? Because ultimately it is fear, a combination, actually, of fear and greed that drive the gold and silver market. And it is unique in that way. Gold and silver are different than any other asset class on the planet, because they are driven by a combination of greed and fear. And you've never seen a market move until you've seen fear driving a market. Again, we've been doing this since 1972. We've probably put $4 or $5 billion into the gold space, and very proud to help people, willing to be the advisor. We certainly take more of a consultative role if people want to understand the best way to approach the metals markets. Whether you're in a bull market or bear market, there's ways to grow metals portfolios, compounding ounces, taking into account ratios and things of that nature. And I think we add a lot of value for the clients who are interested. We add a lot of value. We also have a money management business. We're long. We're also short. We work with one of the best guys on the planet, Doug Noland, who's written the Credit Bubble Bulletin for about 20 odd years. Got a lot of talent. We got a lot of talent in analyzing the world and knowing how to get on the right side of things. Now, our view is be a little early, but don't be a minute late. And Kenneth, I think that's why we get along. Rather be practicing a little bit of patience and be in position in front of a wave than miss it entirely.
Wow. Great words there, David McAlvany. David, thanks for coming on the line with me today and sharing your knowledge and just being a resource, a thought leader out there for us to tap into. And I encourage anyone who wants to reach out to you, learn more about what you do, to visit your website, McAlvanyICA.com. We'll have the link in the description. David, thanks for coming on the line with me today.
Kenneth, great to be with you. Thanks for inviting me.